So I'm reading on Facebook, a garbage group, roll-off dumpster business. I'm new to roll-off rentals and don't want to make a pricing mistake. So can you all share some insight on how you price your jobs? Some of the responses. Start by charging what your competitors charge. Another guy says, try to make $150 each way. Another guy says, I've been told to double your dump fees as a baseline. In my area, I try to charge $100 each way. Call your competitors and ask them. Number one, you need to know your costs. Ah, ding, 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 right answer. So to calculate your prices in the roll-off system, whether you're running a tandem axle roll-off, tandem axle hook, single axle roll-off, dump trailers, or a pickup truck with a roll-off trailer, you have to keep accurate numbers, and the principles of charging for all of those systems are the same, whether it's a hook truck, roll-off truck, big truck, small truck, whatever. Principles the same, only the numbers differ. So in order to price something, you have to know your costs. So what do you need for costs? Unfortunately, you need a detailed profit and loss statement. So you all have profit and loss statements. I don't know the format of your profit and loss statement. You'll have to have a profit and loss statement for the IRS. So you're already doing this. It has to be in a certain format so that you can isolate certain costs and calculate some cost per hour or cost per load. The second thing you need is some benchmark statistics. And as a minimum, you need to keep track of driver hours or driver payroll hours and the number of loads that you're hauling, number of loads that you're getting paid for. It's also helpful to keep track of your miles. And I don't charge by the mile, but that's useful when it comes to calculating fuel costs. So again, we need a detailed P&L and benchmark statistics to know our costs. And without knowing our costs, we can't come up with a price. So this is quite simple in the garbage business. What we do from a pricing perspective are the three things listed here. We sell truck time, we rent equipment, and we pass through disposal costs. Jake, can they see this disposal cost? Perfect. My assistant is a third generation garbage man.
It's going to be cut out, don't worry.
Cameraman.
Get back to the subject.
And accountant.
Get back to the subject.
So here's the biggest one. We sell truck time. And included in truck time is all of our labor costs, all of our truck expenses. And when I say truck expenses, I'm talking about fixed expenses, which is your depreciation, your insurance, fees and whatnot, things that don't vary based on how many hauls you do. And then variable truck costs. And variable truck costs is just a fancy way of saying repairs and fuel. Also included in truck time, from a costing perspective, is the marketing, the general, and the administrative costs. And you'll see, we'll get into these specifics in a bit. So the second item is we rent equipment. That would include fixed and variable container costs. Your fixed cost being your depreciation, and your variable cost being paint, stickers, repairs, and whatnot. And then the third one is the simple one, the easiest one. We pass through disposal costs. That's an obvious one. So I'm going to go through some numbers today based on a tandem axle roll-off route. And we're going to have to talk about the assumptions before we look at some detailed profit and losses and some detailed costs. So let's just assume the following. A person purchases 40 dumpsters at $4,500 a piece for $180,000 total. A tandem axle roll-off for $180,000. That'd be a nice new roll-off. And then a spare for $60,000. So our total investment or total capital here is $420,000. I'm not assuming in my P&L that you financed it or that you paid cash. I'm not assuming anything, and I haven't put any interest in for that. So keep that in mind. Okay, so here's our productivity assumptions. We assume that with that equipment, we're going to do 1,000 loads a year. That's about 4 hauls a day, 5 days a week. That's very doable. But we have to consider that a lot of us operate in cold climates, and in the wintertime, our business might only be 60% of what you see in the summertime. You also have to understand, being in the roll-off business, some days you're going to get 8 hauls, and some days you're going to get 2 hauls. So it's going to fluctuate wildly. So we're just going to use 1,000 hauls a year, basically because it's easy math for me. And it's not too unrealistic. We're going to use 2 hours per haul load average. And when I say 2 hours per haul, that includes the direct time, the time that the customer's box is on your back. That includes the time that you're broke down. That includes the time that you're going from the shop in the morning to your first account. That includes the time that you're traveling from account to account. We call that dead time. So it's your direct time, it's your dead time, and it's also deliveries in there. If you're heavy into temporary business, to do 1,000 loads, you might have to do 300 deliveries or 500 deliveries or whatever the case might be. We're also going to assume that, let's just assume that all these are basically 20-yard boxes. We're going to have a 3-ton average on them at $33 a ton, or $100 for our disposal on an average. Again, that's for my easy math. We're also going to assume, and this is actually pretty close to my productivity, that we do 50 miles a load on average. And that's not saying you pick a load up, dump it, return it, and you got 50 more miles on your truck. You might only have 35, but again, about 15% of the time we're traveling from stop to stop, not hauling anybody's box or making deliveries. So if we do 1,000 loads, we wind up at 50 miles per load, 50,000 miles for the year. So those are some assumptions. The other thing is, we're going to go through the costs, and then we're going to calculate some temporary prices. And when we calculate temporary prices, it's very much an average. It's not a specific. We don't know that a haul is going to take exactly 75 minutes. We're just saying for this general area, we're going to come up with some temporary prices. And obviously, if a haul is more distant or extremely close to the landfill, you can add and subtract some numbers there. Again, it's 20-yard. So, I mean, to get from a 20-yard to a 30-yard prices, you might add $40 and give them an extra ton, or subtract $40 and give them 1 ton fewer. We might also go through in this video or a later video how to cost out a permanent account, an account where you know exactly how long it's going to take. It might be an account with a dozen pulls a month or a 1 pull a month, whatever. We'll show how to calculate that. But let's look at a profit and loss statement before we get any further. Okay, so this is an annual profit and loss statement. It's not my profit and loss statement. It won't be exactly your profit and loss statement. Everybody's market's different, everybody's cost's different. But this is a likely profit and loss statement for a 1-route tandem axle roll-off operation. $450,000 is our top line, our revenue. So that would be $450 a haul, average price. Our disposal, again, 1,000 hauls, $33 a ton, $3 or 3 tons per load. That's your $100 or $100,000 in disposal. So our net revenue, our net revenue net of disposal would be $350,000. So that's what we're going to have left over after paying the landfill. So we have driver costs, truck costs, sales and general administrative costs, and I'll get into some very detailed specifics, but I just wanted to put this up here to show a big picture, and we'll get into the details later so that you can look at the finer points, look at exactly how I've costed out a driver or a truck or whatever. So anyway, our driver all in, taxes, wages, and any other thing that we'll go through later, $57,500 a year. That's, I believe, based on 2,000 hours, 1,000 loads, 2 hours per load, 2,000 payroll hours per year at $22. It gives you $44,000, and the rest is things like payroll tax, unemployment, and whatnot. So then truck costs. On my profit and loss statement, I break out the fixed and the variable. Fixed costs, $42,500, and again, that's your insurance and your depreciation, your fees and licenses and whatnot. Variable costs, which is basically repairs and fuel, would be $55,000 for a total truck running cost of $97,500. And our sales and general and administration, $49,900. Let's call it $50,000. So container costs, our fixed cost is $16,000 a year. That includes $1,000, maybe $1,500 for general liability insurance, and also depreciation on your containers. Repair costs $2,800. That your depreciation and your repair on your containers is going to swing quite a bit, depending upon the age of your containers. For the first dozen years or so, you're going to have a lot of fixed costs, which is depreciation, and very little repair costs. And then after 10, 12 years, it flips. Your depreciation will go down to nothing, and your repair costs will skyrocket. So we look at about $224,000 of total costs, and that gives us a profit of $126,000 for the year. That's your $350 minus your $224 is $126,000 in profit for that year. So to get back to our model of selling truck time, renting equipment, and passing through disposal, this is step one. This is how you calculate your selling of truck time for a haul that's going to take you a total of 2 hours. So the driver, $57,000, the fixed and the variable truck costs and the SG&A all total up to $205,000. Now you have to add, so the $205,000 represents $205 a haul just for the trucking portion of it, or just a hair over $100 an hour for the cost. So you're not going to do things at break even or at cost, so you have to add a profit. And what we do here to add a profit is we take the value of the assets in that system, the truck and the spare. The frontline truck was $180,000. The spare was $60,000. We come up with $240,000. 30%, or a 30% return on gross assets of $240,000 is $72,000 for the year. So we add that to our costs, we come up with $277,000, and that's the per load cost for the truck portion of our price. $277 a load gives us a 30% return on gross assets. So the second part is container rent. So we have container fix, which was our insurance and our depreciation. Container variable totals up to $19,500 a year. Now we have $180,000 worth of containers. At 30% return on gross asset is $54,000. So the 19 and the 54 is $73,000. Divided by 1,000 hauls, it's $74 is what we need to get a return on that. By the way, this is for 2 weeks. So if we wanted a monthly price on a dumpster rental to get a 30% return on gross asset, we'd be looking at $150 or $5 a day. So we got our truck requirements for pricing at $277. This is just a summary of what we've already talked about. We got our container at $74. We got disposal at $100. Of course, this is going to vary by market. We come up with $451 a haul is what we need to cover our costs and to get a 30% return on our gross assets. Goes right back to the P&L where we had $450,000 in annual revenue for 1,000 hauls. So earlier we looked at a profit and loss statement that was a bit more general than this, and I said we'd come back and look at some specific costs, because I know a lot of you have figured out your costs. Sometimes it's helpful to see how other people have looked at their costs, see if you're in the ballpark, see if it's similar. So this is the same P&L, but just in a little bit more detail, and I'll talk about the lines. Again, we went through our revenue, $450 a haul times 1,000 hauls, minus our disposals, $350 net revenue per haul. Driver wages, which had totaled up to $57,600, The wages on that were $45,700. Work comp, I believe at 9% was about $4,000, and payroll and unemployment tax was about $7,700 a year. Truck costs, the fixed costs. I've got fuel at 50,000 miles a year at I think 6 miles a gallon at $2.50. So that's where I get my fuel at $21,000 a year, or $21 per haul. And my repairs at $34,000 a year. At 2,000 hours per year, 34,000 is $17 an hour for repair costs on a truck. I went back and looked at my historical numbers over the last 19 years and modified it using CPI, and I came up with $12 an hour. And I don't think that's high enough. So I added $5 an hour, or $10,000 a year, basically because I've had a series of emission related issues with my trucks. This past year, one cost me $12,000, another one $5,000, another one I got fixed under warranty. But I think today, with the emission trucks, or the emission problems that we're having with trucks, I think $17 an hour is a good number. Truck fix depreciation was $27,000 a year. That's that $180,000 truck divided by 12 years, and the spare, $60,000 spare, divided by 60 months, or 5 years. Now, when you do a P&L and report numbers to the IRS, you're gonna depreciate an asset over a year, or 3 years, or 5 years. But for the purpose of costing, you need to depreciate something over its likely lifespan. So you're not gonna write a truck off over 12 years for the IRS, but we're gonna write a truck off over, a new truck off over 12 years for our costing. The sales and general and administrative at $50,000 a year, $49,900. Get into some details on that. I have a clerical worker at $6,000 a year, or $500 a month. If you're running a single truck, you're not going to have a clerical worker. But I thought we should put something, even if it's just $500 a month, so that as you scale up, start adding trucks and whatnot, eventually you'll have the expense in there to hire somebody to answer phones and to schedule and whatnot. Advertising, $10,500 a year, roughly $800 a month. That would be a write-off of a website, plus maybe $600, $700 for Google pay-per-click. Credit card fees of $9,000. That's the $450,000 times about 60% of that being temp business that you'll use a credit card on, times 3% for your credit card fee. Professional fees of $3,600. That's your accountant. Telephone, $3,600 a year. That'd be a couple of mobile phones and one landline. Rent, $9,600. Now that could go under your sales, general administrative costs, or that could actually go under truck running costs, or you could apportion it. Utilities, $1,800. Bad debt, $4,500. That's 1%. So that's a good number. If you can keep your bad debt down to 1% of your revenue, you're doing pretty good. So that's a total of $49,900. I thought I'd just go through those numbers because a lot of people are going to look at that $50,000 a year for clerical and administrative and say that's crazy. Well, they're the numbers, and that's what they add up to. This just brings us back to the original profit and loss statement that we'd already looked at. So there's a lot of numbers here. It's very confusing. It's my first video. If you have any questions, leave a comment below. I drive a truck 6 days a week. I'm not going to be able to respond right away, but eventually I will respond. If you have a great question, maybe I'll do a video on it. Thanks for watching.